In this video, I'm going to talk a little bit about mindset. This is another one of those videos in this training program that is probably one of the most important, like top 5 or 6. And the reason for that is it will save you a lot of money when it comes to trading meme coins. And what I mean there is if you're in a position, it will save you from losing substantial amounts in that position. I don't mean substantial in terms of the whole amount. I mean in terms of percentage. Taking those massive 80%, 90% hits. That's what we don't want when it comes to meme coin trading. Even if you have a small position, you don't want to get into that scenario too often. You want to take maximum 30-40% hits if the price quickly moves and then make quick decisions. This is a random collection I'm on at the moment. This is JupCat, and this is probably just here because Jupiter and airdrops and stuff like that are just very trending at the moment. So let's jump to market cap. And let's go on to a second chart, 1 second chart, which is usually what we do when we're doing wave 1 trading. And you can see, wow, its market cap did really well, got up to 500. Notice, I've mentioned many times in this training, why does it get up to nearly exactly 500,000 market cap? Literally to the dot. So just as a side note, you should be selling under that, way under that, and make sure you get out of your position and take some profits. Now, with this one, obviously, we don't know if it's going to run or anything like that. But the point of the video is sometimes, especially in these wave ones, suddenly within a few seconds, this is literally a few seconds now, we're at 400 and we're suddenly at 277. So literally, quickly, the market will turn against you. So let's say you were buying a dip or what have you here and you jump in. This is where emotions can get the better of you. Sometimes, if you've gone in too big, let's say you usually trade one soul, but you're confident now, you've done some good trades, or you just want to quickly make money and you're getting impatient and you put 5 soul in and you bought here at 400. And right now, let's say the price is 250, so you've lost 2.5, which is a big loss. So it's 2.5 sold, so pretty much $250 almost exactly. It's very common here to do silly things. One of the silliest is if you genuinely think this collection's struggling now, to just hold at a loss. Now, actually, one of the best ways to get out is wait for a tiny bounce and then just quickly sell, but cut your losses. And if you cut your losses, you might get out at 3 sol and still take a 2 sol loss. But that's better because in wave 1, so many of these collections slowly start trending back towards zero, as you know. Well, back towards a liquidity pool of 1 or 2,000. And you don't want to get stuck there because then instead of getting 3 sol back out, you will be getting out 0.2 sol or something ridiculously low. And it's nearly happened with me a few times. And one time it did happen. It wasn't a massive position, but literally I was just like, I can't believe, I walked off and I wasn't watching the screen and it suddenly dropped and let me just hold because you never know. And when you start saying you never know and you're hoping, that's not trading. So as soon as you start hoping and trading, that's not trading. I mean, you can be hopeful for a breakout trade that it works out the way you want it to, but that's having a trading plan and a specified target. Hoping randomly whilst the price is crashing is not any kind of trading plan. And that's where you must cut your losses quickly and get out. Now, 1 time out of 10, this might go down further and then reverse and then suddenly go off to 1 million. But 9 times out of 10, you know as well as I do, it's not going to do that. We've gone through enough meme coin charts in this training program to know that that doesn't happen. You have to get out. And then what's the next thing that happens after that? So let's say you take the loss or you don't take the loss, whatever. That's step 1. So your decision there will be very important. And if you make the wrong one, fair enough. Don't dwell on it, move on. So 1 is cut losses. And if you don't, then don't dwell. So we'll put here, don't dwell. Now, what happens next? What happens next is something called revenge trading. Very, very common. It doesn't matter what type of market you trade in. So how this works is you've taken a big loss and you're like, I need to get my money back straight away. So you come on to new pairs, you click on to the next thing that you see, some other rubbish meme coin, and you're like, well, let me just put 10 sol in here because if this just does a little bump from here, then I can quickly sell out for 20 sol and I'll have made back my money. Very common thing. Don't do it. You're literally getting borderline gambling here. I mean, it's all really gambling in a way in terms of probabilities and stuff, but this is just sheer gambling. And this is revenge trading. And that's trading on emotion, not trading because you saw a good setup. The best thing you can do in step 3 is You don't want to revenge trade. You want to walk away. Walk away. And come back when you have a fresher mind. And sometimes I was like, let me just do a little, I don't call it a revenge trade, but let me do a few more trades, see what happens, stuff like that. But then I slept on it. I came back fresh the next day, and actually I made way more than the loss I took that particular day. Way more. Because I was fresh, I looked for good setups, and I was like, forget what's happened already. Let me start with whatever the balance is. So let's say you had 10 sol and it went down to 5 sol and you just had a bad trading day. The next day, pretend 5 sol is all you have, and that was the starting money in your account, and just focus on growing the 5 sol. It can be very quick, as you know. One trade could quickly get it back to 10 sol. It's not a big deal, but you don't want to get emotions involved. So like I said, it's a very important video. Make sure you cut your losses. Make sure you don't revenge trade. Make sure you walk away when it's right to walk away. And don't just rely on hopium when it comes to any type of trading you do in life or investing. If you're relying on hope, you're in trouble. Especially if you're relying on hope and you're holding a loss, you're in trouble. Sometimes it's better to take the losses. Too many, especially meme coins. So many times a position's gone against me and I'm like, oh, let me just get out. Always get out. Like, honestly, with meme coins, the majority of the time, it's going to work in your favor. And how do I know that? And this is not just guesswork. This is a probability game. I know that because most of the charts do that. And it doesn't matter if they do that over 1 hour or over 3 hours or over a day. Most of them are trending right back down. The odd ones go back up, but not many. And even then, the odd ones that are bigger collections, they don't even go back up. They just kind of stay at 10 million market cap, or they stay at 100 million market cap and go sideways for months. They don't even really go up. But most of them either go down or sideways. So if that's the case, as soon as you're taking a little loss, how does it make sense probability-wise to stay in the position? It doesn't. Probability-wise, it's going to go against you more often than not. So better cut, take a little loss, and make more on a next trade. Hope that helps. Thanks for listening.